Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, so let's go back to the discussion of the euro currency. Especially right now we have some more details concerning the current retracement up. As we will see on the lower time frame chart, now we could say about possible destinations of this retracement with the more precision. But speaking about the daily time frame chart, so you see that market now is standing with our trading plan, as we have suggested that market could show some bounce in our weekly research, since that's nice support. It's favored euro currency 50% support right at monthly pivot support 1, and we said that probably market will show some reaction. At the same time, this move down was really fast and existing of very close to the current price, the yearly pivot point that hasn't been tested yet, suggests some deeper continuation to the downside. This really could happen. Also take a look that in general that will be a really significant cluster. So yearly pivot point, weekly pivot support 1, daily average sold, fib support 135.23 area. So you can see this will be a really significant barrier for the market to continue move down, and probably if market will reach this level, that could be the reason for the significant retracement up. But right now our major focus is to estimate where the retracement could finish to the upside and what targets market could reach to the downside. So if you'll take a look at the 4-hour time frame chart, you'll see that market now stands at the bounce up, and previously we said that it's possible that market could stop retracement either here, because this is the combination of the weekly pivot point and nearest fib resistance, or here. This is monthly pivot point, weekly pivot resistance 1, and take a look, confluence resistance on the 4-hour time frame chart. But the one condition that could clarify for us the depth of this upward retracement is the fact that market has not hit the 1618 extension target. So that was the 100% extension from that A, B, C top. Market has accelerated right to the 100% without any respect to the minor 618 target. That was the 100% extension. No bounce at all, almost. It's a very small reaction to the significant target of this ABCD. It's really plunged down right to the target and has started move to the downside, but hasn't quite reached the 1618. In these circumstances, markets very rare shows true deep extensions. So this is really a deep extension, a deep retracement for our time frame chart. And this could be logical to see this bounce if, for instance, market has hit the 1618 target first and shown retracement second. But since it hasn't reached this level, and we have discussed it in our weekly research, then the chances that market will finish retracement right here around 136.70, 136.75 area is more significant. So I suspect that market probably could reach this area and turn to the downside again. And the minimum target that probably will be reached is 135.50 area, is the 1618 extension target. But as we said in weekly research, so you could reread some parts of the research, it's really there are chances that market could continue even lower, as we said, to the yearly pivot point, since yearly pivot point now works as the magnet, and the markets every year tends to touch it during the year. So that's the first reason why I think that this area is more probable to be reached, and the chances that market turn to the downside again from this area looks a bit more significant, rather than it will continue move higher. On the hourly time frame chart, we have another confirmation. We have another reasons to do this, to think about it, because take a look at this extension to the upside, A, B, C bottom. Take a look, fast extension with the leg that is faster than this one, and right to the 100% extension target. When the market shows fast action to the 100%, it significantly increases probability that market will continue right to the 1618. Because market here shows small retracement, we see this acceleration. It tells us that another leg to the upside is possible, and the market probably could reach the 1618. This action to the downside doesn't look like the thrust or impulse move, not of this sort. That's small candles, long shadows, overlapping candles, very smooth action to the downside. That's definitely the retracement. If this is retracement only, then probably market has a lot of chances to show the continuation to the upside. Take a look that 1618 extension stands at 136.74 approximately. So if you'll take a look at the 4-hour chart, you will see an agreement. So we have the ABCD agreement with this fib resistance right at the weekly pivot point. So it's very good combination of the resistance, and this really could be the reason for downward reversal and downward continuation, especially if we also take into consideration that this target 1618 extension hasn't been hit yet. Well, now market stands at the confluence support on the hourly time frame charts 136.15, 136.21. Also take a look that this shadows has reached the 50% level. So I don't have it on this chart, but that is also the 50% support from the whole thrust up. That's the level that euro currency likes most of all. So I can't exclude that market will show this some sort of the upward continuation, and now we should keep an eye on the area between 136.70, 136.75 at the possible area for reversal down. And the target will be, a minimum target will be around 135.50 area. So that's my short-term opinion on the euro currency. Well, the one thing that we should avoid, so if market will show, for instance, very huge big candle to the upside, in this case we probably should wait a bit more and do not take the short position right here. So it's better if we will get some more gradual move to this area. This move could include some candles, some sort as we see here, but we do not want to see the really one big candle to the 1618 target. So this will be a bit too much for current upward action. In this case, it's better to wait a bit and to see some continuation before taking the short position. But if it will develop as it stands right now, then keep an eye, guys, on this area, because it really could become the reversal area to the downside, and the possible target, as I said, is 1618 extension on the 4-hour time frame charts 135.50.